Good morning and welcome. Happy Sunday. It's Ryan Rigg, aka Wolf of My Street. Welcome. Warm welcome to all the subscribers this morning. Wanted to take a look at a little wrap up. So, what we're going to do with this format, just a little Sunday wrap up. We're going to look at what we talked about last week. We're going to take a look at some of those tickers. We're going to look at some option flow. So we're going to look at MSTR. We're going to look at coin as they correlated to Bitcoin. We talked about Netflix had strong earnings previously. So we had posted this Monday, October 21st, ahead of the market open. Try to like to do that. Some things I'm looking at, some ideas, just some information, maybe some alpha for you. And we had NVDA was the name we've been watching. And for the new subscribers, you can go back in the feed and check out those charts and the levels that we had previously shared. And then obviously the blockbuster Tesla earnings on Wednesday and after hours. So let's not waste any time. I don't want to take up too much of your time this morning. Just want to give you a wrap up here or whenever you're able to watch it. So let's get right into MSTR and let's check out that daily chart here. We'll get some of those levels here, and they're over there to our left side. We got the 9-day EMA at 216.61, the 20-day EMA at 198.96, and the 50-day at 161.11. We have the close price on Friday, 234.34. What an incredible rally. See, opened at 236, incredible. Low of 227. We're getting kind of up there. However, Bitcoin correlates with the stock as it does with Coinbase, and we'll talk about that as well. So you kind of see when Bitcoin's up, MicroStrategy and Coinbase will move up. There's other stocks that move up, but we'll just talk about those two. Bitcoin will draw down a little. The stocks will draw down. MicroStrategy, they'll continue to issue, stock, equity, bonds, etc. And then they use the gross proceeds, the revenue from that, and they add additional Bitcoin holdings. So it's really something they've added an incredible value to their balance sheet. And for example, if we go back to like say September 6th, the low there 113.69 and a pretty incredible rally 234.34. And we talked about the reason I wanted to highlight MicroStrategy. We talked about some of that option flow ahead of the market open, and we're going to look here at the 7-day net premium. If we take a look, for example, October 18th, an incredible rally there in the net call premium, almost 33 million. And then we can see the rally. Let's see, we posted that on the 21st, saw a slight decline in net call premium. However, the yellow line here, we can see price had continued to elevate. And then on Tuesday, we had a slight increase in net call premium. Price retraced just a little with the decline in net call premium, but then again, a rally of net call premium Thursday, slight sell off, rally again into the close, and then Friday we saw a newer daily high with some of that net call premium, and then obviously some profit taking as we saw the levels come down. But a strong day on Friday. We had premium about 700 million. Net premium was 4 million with the 12.8 net call premium. So when you see a net call premium, sometimes there are market makers will need to add additional shares, depending on options to hedge. So when you get a lot of extensive net call premium, there may be additional share buying that takes place, which kind of creates some additional upside pressure. And the opposite would be true, with some call selling or put buying, where some of that pressure is then relieved for the hedging of common shares. And you'll see that usually reflected, in charts. So if you see a heavy amount of option flow come in, you'll be able to see on a chart, like a 1 minute, a 3 minute, you can see the subsequent common share volume that gets traded against some of those positions. So definitely something to look for. And some of the highest volume contracts there we can see on Friday where they were targeting the 250s, 240, 245 for the expiry on Friday. There were some 260 calls that came through. Let's see, for November 1. Incredible amount of volume there. There was a multi-leg trade. We can see the 81%. So we always want to take a look at that particular trade here, and we're able to do that with unusual whales. And we can take a look at that trade and pull that up. So we're going to sort here. We're going to look for that high order, 12.6 mil. And we're able to see these up and down arrows here, and it indicates part of like a multi-leg strategy. So we're going to pull that up to see what that trade was matched with. We can see here the possibly multi-leg trade as denoted by unusual whales. And it does that by picking up on the size of the order and the time. And usually what this will correlate, this is more of a complex strategy here. We're able to see this different positions that were executed within this multi-leg transaction. Combination of, looks like 220 and 225 calls, or pardon me, 220 and 250 calls on Friday, with 260s for November 1st and 295. So they're playing a multi-leg position there. We could put that into the profit and loss calendar, but I don't want to get or profit and loss calculator, but I don't want to get too lost there into that flow. But let's go back here and see what else we can see, what was on MicroStrategy for the day. We'll look at some other things here. Some of the 230 puts. Those were for the expiry on Friday. And let's see what else we can dig up here. Historically, though, if we look at like net premium, to give you like an idea like what this week was like, for example, on the 17th of October, only 186 million total premium, whereas, for example, Friday, 700 mil. So as we can see through the week, we had posted Monday about the ideas, pretty strong net premium last week and total premium. Aside from the 21st, which was a negative net premium, still a solid total premium day. And we saw the upward movement each day as we looked at the MicroStrategy chart. We can go back to that. Even with a little pullback, we were still making new highs and continued volume there. RSI can stay extended. You know, it is a lagging indicator. It comes after the fact. But always something to keep in mind as we move up and start pushing higher. You know, watch the volume there at these levels. Watch these candles. Sometimes this candle could indicate a reverse in trend, could just be a slight pullback to continue higher. Stocks move up and they move down. So let me jump back over here. We'll pull up just for a second the hottest contracts based on option premium. I know you guys have probably seen these posts before. So how I organize these is I'll basically go in, I'll look at the top contracts at, for example, Friday, and then I just sort them by top premium. So whenever you see the posts about top premium, that's kind of what I'm talking about there. And we always try to be cautious too with a multi-leg because, for example, say you saw these 180 calls and you're like, hey, that's bullish. Obviously it is. They're in the money. And they were for the Friday expire, but they were running a spread here. And we can see the multi-leg. So you see they sold this, bought that. So you always got to be careful of the multi-leg. Sometimes what I'll do when I post the flow is I'll use my filters and I'll come over here and we'll go down to multi-leg. And just to clean that, if we don't want to see as many multi-leg, I could say set that to say 25%, and it would reduce some of the multi-leg reporting, which may give you some directional idea. But to be honest, a lot of the flow is just noise. Some of it's directional, a lot of it's institutional hedging, a lot of it hedging or just call buying, call selling, put buying, put selling. But sometimes then you can look at the flow looks different. So you don't necessarily gain the full picture, but you see less of the multi-leg, and maybe you'll see something that's unique within there. For example, we can see, here's something unique there. We can see a 70% skew, which is a little bit higher on the ask side. See, a lot of these are split, 50. So it's buying and selling. There's nothing that like really jumps out. When you start getting in like 70 above, that's something to kind of maybe take a look at. So if we pull that up, we can see Friday, there was some volume, a little bit of open interest. 10 million in premium. Now some of that premium on Thursday, we can see 1300 volume. We see an increase in open interest plus 337. So there was a little bit of activity there. We can look at the 2-day here. So we can definitely see some ask volume as well as bid volume, and the open interest increased. Say for example, the beginning of October it was 10. So it did increase a little bit here this week. 300 puts, that's something that's obviously in the money there. So it's going to kind of move with the underlying higher delta on that. So 28%, negative 28% out of the money, which just means it's in the money. So take a look at that here. 10 mil, 11 mil total premium. So we'll take a look at the open interest update on Monday there. So you buy in the money put, you know, to get exercise, get assigned, which have you. So take a look here. So yeah, so you can just see some of the premium there. And we'll put back on the multi-leg here real quick. So we can just see the full scope of everything then. Just for like the total price, the total premium. See, it becomes larger when you see some of those larger trades. And some of these, with the expiry, is obviously passed. So you could filter out like that particular expiry if you wanted. So a lot of different ways that you could look at unusual whales. So let's jump over here to moving on to Coinbase now. We'll pull that up real quick on our daily chart and go over some levels there. Good volume, a little retracement there when coin pushed up past the previous high like August 23rd, around 211, 212. And we tried that again a week ago, and we kind of got denied, and then we saw the push on the 18th, last Thursday-ish, Friday, or a week ago, and then we came back Friday. Nice position, nice volume there. Started to get a little extended on the RSI, still above moving averages, and then Monday, Tuesday, Wednesday, and then we had that nice opportunity Wednesday, low of around 194. That was around the time of the Bitcoin news, and let me run that through my head. The headline was, I think, the Bitcoin looking into Tether or something. I'm not sure. Something drove it temporarily. I think it was a Wall Street Journal piece. I shared it on the page. We could go back and find it. And then it looks like that dip was bought. Some more call options. We can see that volume there. And then Friday there. So with the close, Friday 205.04, a low of 203.43, opened at 208. So that high there on October 18th, 220 volume. So let's jump over and take a look at the flow here. See what we can look at for the net flow, which gives us kind of like the broad look at the call and put contracts. So we got Coinbase net flow here. We'll pull up our 7-day. So we can kind of take a look at how the week progressed. So Monday, as we talked about, we started selling off their names to watch. Mr. moved up, Coinbase moved down. We can see the net put premium here on the 23rd on Wednesday slightly increased as net call premiums down. Thursday, the same net premium, which is the red net put premium here, kind of remained the same, and then a little spike into the net call premium into the close on Thursday. And then Friday, net call premium kind of tight at the open as the stock kind of retraced down. I did see net put premium increase and then a slight rise up of the net call premium into the close. We can take a look at the 1-day as well. 143 mil premium, but the net premium negative 5.8. So you saw a little bit of that downside with what we just talked about with Mr. So we can see that 1-day here. Net put premium increased on Friday. This was around 2 o'clock Eastern time, 1 o'clock Central Chicago time, and then a decrease in the net call premium. So a little bit of down with the price. I could have been just selling into close. Take a look at some of the highest volume contracts there were the 210s, 215s, 212s, and 220s for the Friday expiry. Most of the volume for Friday was targeted at the Friday expiry. We talked about the 143 mil total premium. And I mean, comparative to the week here, we can see kind of how that ranks up. A little bit lighter day when you compare to the previous. Back when let's see, 220. Yeah, so when Coinbase was around 220, a little bit of elevated premium there. So you can see that here. And let's take a look at the hottest contracts as well. See what we can dig up here real quick. We'll pull up the hottest contracts for coin. Really like using the unusual whales. Kind of helps with the data. And if it's something you're into, they're having a sale, 15% off actually through the end of October. So if that's something you're interested, I'll leave a link here in the bottom of the video. You could use the link and snag a discount if that is something you're into. So you look at the Coinbase calls here, total premium. Somebody's got the deep in the monies for $5 calls. That's awesome. I love seeing the deep in the money ones. So $5 calls, January 16, 2026. Open interest increase. These are very expensive, obviously. Call contracts. But buying deep in the money is usually a large player there. A little bit of premium, 6.2 million. And the delta, with these being so far in the money, they'll basically move up and down with the underline. And they have so much time on them. So it could just be a hedge. Could be somebody looking to obtain stock at a later date. You never really do know 100% unless you're the trader executing the trade. See some of those multi-legs where somebody's running a spread there. 98%, 95% on the 197 and 195 calls for Friday. Saw some 300 calls there for January 2025. A little bit of volume there. A little bit of gain in open interest. Some premium. So it's something we can take a look at for next week. To see what the open interest update is Monday. Some people might be looking at, an upward move there or a continued move just to capture, maybe an increase in premium. For example, these contracts back had traded, around, looks like $200, $300, $700, $1,000. So when you see 10, for those that don't know, like that's $1,000 contract because it represents 100 shares. So when you see some, for example, $2.65 or $2.65, the cost is $265. It represents 100 shares. So some of that volume there, some of those hottest contracts. And I, like I said, I always usually post open interest updates in the morning, had the market open, just to see what has changed, what has transpired from there. And let's take a look at Netflix. I just wanted to make sure our list, we were going in order here so we can keep it organized and consistent for you guys. And try not to, guys and gals, I use guys collectively, try not to take too much of your time here. Take a look at Netflix. Let's see, October 17th low, 677.88. We talked about watching that. Let's see, on Monday I talked about that, but Friday was a nice move there. Gap up following earnings, and then Friday high, which is pretty remarkable to see, 773, or pardon me, not Friday, but Monday's high. And we talked about it as a name to watch on Monday. It's always good to see a name you're talking about watching and then, pushes up, makes a nice high. And see Friday high, 768.50, closed at 754. So trading just above here, the 9-day moving average, 744. So a little high, a little up there, but stocks move up and they move down, and sometimes you ride the trend. We saw Netflix, they make money. They kind of got the streaming platform on lock. They're kind of the dominant player in the space. So the stock definitely trades with a premium for that based on the numbers and subscribers. So let's pull up some of that option data on Friday on Netflix. See some 760s out there for November 1st. Just kind of slightly out of the money here. Let's pull up the 1 day. Could have been some selling. Looks like buying and selling here. A little bit more bid than ask. So it could have been selling, looking for downside. Could have been buying also because there's some ask volume as well as bid. So it's always important to look at both. It's not a guarantee. We just try to assume based on the information, put a bid selling, an ask buying on this particular call. It's not always true. Sometimes you can get a good fill, which will show maybe a bid or a ask, but it may not be that. For example, you might have got a great fill below the ask. In unusual whales may show that as a bid, but you actually bought, and the bid might be the assumption of sell. So something to always kind of keep in mind there. 790 call looks like a multi-legging. See the 94%. So don't always read into 790 bullish for March, and that may still be true, but it looks like this position, like I said, is coming through as a multi-leg. So good opportunity to talk about that. Again, we can click on that green candle and grab a little bit more data from that here. We can click on these arrows, try to identify possible multi-leg. So it looks like a combination here. Long iron butterfly is strategy identified here. So what that happens is, looks like we are multiple things, 750 call, 790 call, and then using the same expiry, a put of 750, 710. So you have multiple spread, multiple positions. So in one essence, you're buying one, selling one, and you're running here in this particular situation a long iron butterfly. So you see a lot of these more complex strategies, option trade, institutions, big banks, big shareholders, etc. There are a lot of retail traders that do complex trades. Sometimes they're not as complex as these. Sometimes they just are, iron condors, things like that. A lot of time with retail trading, you see a lot of call buying, call selling, put buying, as well as like put selling, covered calls or cash secured puts. Very common strategy in the retail space, one I use as well often. Buying and selling, buy low IV, sell high IV. Let's take a look actually too real quick at we'll look at the flow as Netflix, with earnings, something we were talking about following earnings, and then we can see, kind of what transpired this week in terms of the flow as price did move up. So the 17th, boom, up on earnings, and Monday here we were trading, 770, still right in line with where we were at Friday. We saw the premium obviously come in on the 18th, and again on Monday we see an increase in net call premium, and premium down on Tuesday. Increase in net put premium kind of as price rode down. Same with the net put premium then on Wednesday, but then we saw a spike then on Thursday, a net call premium, and Friday just kind of semi-flat. Premium on the day 113 mil, negative 6 mil roughly, 5.6 mil net premium, and then net call premium negative 5. So the stock was still up, still in a great position there, still in a great place. PE ratio 43. So 43.67, not too outlandish of a premium there. Some of the hottest contracts, usually the volume especially on a Friday, is going to be focused a lot around that particular expiry. And we can see the highest volume is focused on those expiries there. But yeah, Netflix, long term has always been a play. I remember looking at Netflix years ago. And it was something I still kick myself because I was actually looking at it back around 2012, 2013. I've been a customer since getting the actual DVD discs in the mail. But I always think about that time period around when I thought about a more of a long term situation where maybe Netflix was going was around this 2012 period. And I think around that low, even let's just go midway at like 10 to even now, 12 years, 7,000%. So Netflix definitely a good player in the space, and definitely a great stock for any of those long-term holders there. Let's jump over now to NVIDIA. We'll pull that up here. I always love seeing a big gain like that over. I like a long time periods, a long time frame chart. Sometimes it kind of gives you that bigger perspective here. We'll come back over to NVIDIA, and we got still some of our levels there from our previous charts that we have worked with. I try to keep all that data the same. That way it stays consistent when we go back and look at them. And these were some of those levels we first charted, and we were just absolutely above them, which is just incredible. So we look at Friday there, we closed 141.54 with a high of 144.13. Absolutely incredible. And that high on Tuesday was 144.42. I know it was something we talked about watching. Monday, we got the low 138.01 to a rally then of 144. The following day, great day for weekly call options, as well as we had some 2 week out call options. I try to stick with like in the money, at the money. And if I add time, like 30 to 60 DTE, I'll go a little out of the money just because I have some time. If I feel good, I try to keep my losses. I cut my losers quickly, keep stop loss pretty tight, and I'll always take gains pretty quickly because there's always another trade. There's always another day. I don't full port my position. Any trade I take is very, very, very small in size compared to the portfolio, unless there's every once in a while, I may get a little more aggressive. It just depends. The older I get, I'll still maintain that aggressiveness, but I still try to maintain capital preservation and risk management above anything else. So the rally there with with NVIDIA has continued. Let's zoom that chart out here just a little bit, and then we'll take a look at some of that lovely option flow. It's just been on a tear, absolute tear. I know that was that first chart we had posted. We talked about 5 years, 9 months, 4,000%. I think we were going back to the low here. I think there were some splits here, or pardon me, stock split adjustment. December 24th, so Christmas Eve rally all the way 4,400%. I mean, give or take whatever you're feeling are with Nvidia, it's certainly generating revenue on the street, and it brings revenue in options too. It's a very, very liquid stock to trade commons and options. A lot of money moves in and out of this stock too. So, for example, Friday, 1.9 billion total option premium. Net premium though was negative 205 mil. Could have just been a lot of unwinding there for expiries. You can see that big dip there in the net call premium at 47 mil, and then down to negative 178. So some closing, could have been some rolling, and those numbers are right here in that net call premium that we're looking at right there. It's on the 7-day here. So Monday, we had that nice spike, which is something I said to watch for ahead of the open, and price certainly rallied. A little bit of a sell-off, a blowback, get back down, come back. Like I said, stocks move up, they move down, they retest levels, retest support, retest resistance. A lot of the technical analysis, I think, across the board seems to be, in like a self-fulfilling prophecy kind of way. We look for moving averages. We look at volume. That's what I try to focus on. What the option flow? Where's the premium going? Is there some type of direction there? Because everything else is just kind of noise and speculation. We just try to use the data we have, to make our best guess, our best assumption, our best hypothesis, develop our best strategy. What's going to be our best trading plan for this particular scenario, depending on how we're looking at it. We look at historically, like total premium, a pretty good day, 1.9 billion on Friday. It's kind of like I said, run of the course, pretty expensive. Premiums that come into NVIDIA and often traded, very liquid. So for example, on the 15th, there was 3 billion total option premium. So it's not out of line to have that type of premium. And then if we look at like the highest contracts, highest volume Friday, again, a lot of that, like I said, focused on the same day expiry. There's a lot of day trading. I will day trade. I day trade options all the time and get in, get out, cut loser quickly, take a gain quickly, move on to the next. I'm not married to the option. I'm not married to the position. I'm just married to the opportunity of continuing to grow, build the portfolio, and provide for my family, which is kind of the objective here is long-term retirement, provide for family, and never live beyond your means. It helps all of that too, have a budget. But the 142 calls, 143 calls, 144 calls, 155, so some of those. Let's take a look at the hottest contracts then for NVIDIA. Oh, we're already on that flow here. Pull up hottest contracts here, make it a little bit easy for us, and we can see where that big money was at on Friday. See, there's where those multi-leg trades, and we'll pull those up. Some of those 19.5 in the money, 18.5. This is a big player. Is it Nancy Pelosi? No. Follow Snorlax on X. They will always update you on the Nancy Pelosi. I think they have $12 calls for December, so could be looking to make a play on those very soon. So a lot of, let's see here what we got. We'll look at these $19 calls. All 100% multi-leg, 325, probably a roll of some type, a spread. We'll take a look at it here. I won't spend a whole lot of time on it just because it's a big position here. Let's see what we can find. I know it's funny. It shows up as 2 or 1. Short call butterfly. Okay, so if we see 2 or we've seen a couple, so we get the consensus here. So 18.5 call, the 19 call, and the 19.5 call. Okay. Let's run a short call butterfly. A lot of premium. That's always cool stuff to see too. Some of that big money. So that wrapped up most of it there. So if you were to sort out all of that, it would change the perspective a little bit. So we can see like the 142 call was the next big hitter there. Somebody took 142s. Incredible amount of ask versus bid volume. 235 ask, 120 bid. The open interest was 147. So someone maybe took the 142s. It could have been bought 142s to exercise. Could have covered 142s, sold 142s. Let me pull this up here. It's interesting to buy a bunch like that. Let's sort that by premium, which will make it a little bit easier. I know you're getting kind of a little tutorial with the whales too. Let's see, 90,000 at 154, so right towards the ask, but could have been a good fill and sold them too. So you never really do know. See a multi-leg. Try to figure out, okay, let's see what they did here. Now we got the full picture. So see the size, 90,000. I'm glad this came up. This is a great learning lesson for all of us here. So we can see what transpired here. We sold, it appears, sold 148s for Friday and sold 147s for next Friday, while we sold 155s for next Friday and bought 142s for Friday. I know that sounds confusing. A lot of share equivalency, which that kind of adds to, for example, you buy that many call options, this is the amount of shares that's tied to. So that's sometimes why you'll see that volume reflected immediately within a stock, because the shares there are being hedged or moved against by the market maker, the option dealer, the floor trader, etc., who's ever selling, unwinding, buying, etc., whatever they may be doing on this particular position. So we can see exactly what they're doing here. And that makes it kind of easy to visualize more of a complex strategy here. You could go ahead and visualize. The numbers aren't going to be exactly accurate because the market's not open, so we're not fetching that exact accurate data here. Unlimited loss, limited gain, 4-leg strategy. We could isolate the profit and loss here. Looks like stock stays at the current level or below. They bank, basically keep their money here. Net credit 13.9. Like I said, I don't know if the number is exactly right because the market's open. I always like to look at the profit loss calculator just to make sure our fills were exactly what the trader paid. So you always want to make sure like the price when you're drilling into that profit calculator. So because I haven't exactly checked that, and I don't want to take too much time, just wanted to give an idea. And then that would obviously go south very quickly if that position moved up too much. But kind of where it's at, so that's interesting. There moves up, they moves up, take a L, moves stays the same, moves down, stays the same in terms of the credit. So basically, looks just like a sum of money for the stock, essentially to trade in the values that were. If you send me a message tomorrow, maybe I can remind ourselves. I'll try to remind myself. We'll pull this back up tomorrow, and then we can look at it in real time. That makes it real kind of easy with the profit calculator, just to kind of see, visualize that trade a little bit more. So backing up here, let's close that out. So that was part of that. So, if you saw that and you were like, hey, let's follow them, that may not have been the best strategy because, you might thought, oh, wow, look at all these calls that came in. I'm going to chase it at 154, which kind of getting late in the day on a same day expiry. And they closed out of the money. So closed, expired, worthless. So that's something you always be careful with who you're following to. Not who you're following. I don't mean that in a negative way. I just mean like the flow that's being published. Make sure, they're trying to show the full picture. Make sure it's not misleading or anything like that. Because sometimes this data could get interpreted like you just saw very quickly, incorrectly, and then that could be a situation. So some of the other top contracts there, 140, 145, 160. Those appear a lot of bid side red, so it could be some selling there. Let's take a look at these 160s for January, or pardon me, December. A little bit of selling of those into the close. However, we had some open interest. So it could just be someone unwinding, closing, could be selling more. We'll want to take a look at that open interest update Monday. Open interest updates are only done once in the pre-market hours daily. So sometimes we want to make sure, did some of that open interest decrease from the volume? Did it actually increase? Maybe they added and are selling these calls in hopes that NVIDIA closes below 160 and they can keep the premium. So that's something always to keep in mind, which is why I say always pay attention to those open interest updates. I think it's important. And to wrap up, we are going to talk about Tesla. I know everybody was so excited. They didn't have the same excitement after Robotaxi, but like I talked about to the subscribers, we were ready for Robotaxi. We had our plan. I posted that. It's in the sub feed. We were ready. We talked about this is going to be a basically buy the rumor, sell the news. They're going to hype the event and exactly what had happened. So let's get into our daily chart here. We still have preserved those levels that are intact that we have been charting. I know there's some traders out here that will change their levels or adjust their thing to, kind of continue, the Discord selling or whatever they may do to kind of like, I want to say misrepresent the information, but I always keep any target gaps or anything like that. I'll keep all that intact. In fact, I'll actually go here. I use TrendSpider. I'll go to the properties and I'll make sure that all of my figures are locked. And what that does is then I can move them, but they can't be moved unless I unlock it. And I think it adds just validity and authenticity to the charts. So here was the Robotaxi event. These were our levels we talked about. These levels actually derived from, we can wrap up for the new subscribers here, but the existing ones, you are familiar with where we gained these levels from. We're looking at this is just regular trading hour data, non-extended hour. That's how we're able to identify. That first green area we identified, that came from the gap up following the September OPEX on September 20th when we gapped up. That was our first gap there, and gaps fill 90% of the time. It's not 100%, and could be 0%, but that tends to what happened. Gaps do get filled. Price sometimes has memory and likes to go back to where it was, likes to move higher, likes to retrace. Stocks are priced on what they're going to do in the future, so they'll find where they've been in the past in that same regard. Again, part of that maybe crystal ball, self-fulfilling prophecy. And that other gap was actually created from the gap down October 1st, and we gapped down to October 2nd there, you can see. Those were our areas we identified. When we talked about that up into Robotaxi, we talked about this area served as resistance. Couldn't get any higher after that gap. Down here, we had support, a few areas of opportunity as we tested just previous levels before. That's why I try to look at moving averages and price. I think it's all very important, and I'll keep that always very clean on my charts with 9 EMA, a 20 EMA, and a 50 SMA. That's just what I like to look at, volume, and then RSI. Sometimes I'll add Fibonacci levels as well, just as like price reference. So these were our areas, and then we talked about Robotaxi. is going to be a sell the news event. I'm not sure why. The memo wasn't very clear. A lot of these times with events like this are sell, but there's opportunities. Some took the gamble, sold off down to levels that had just been there in September. So it wasn't like it went too far. I mean, the low, I'd see October 23rd, last week ahead of earnings. We got the low there around 212.11. So similar areas had we been. And then earnings come out, and the big number was gross margins. We talked about that. If you tuned in Friday, I posted a live. It's available also. You can go back and watch that. We talked about those margins, and that was responded to very well and positively by Wall Street and investors. The money came in, and so did the option. One day last week had 3.8 billion in total option premium. We'll get that, but we hit our first level following earnings, first target and second target within the same day. It happened very quickly. I'm on a 90-minute chart. So we were very happy about that, and we pushed incredibly high. Just outstanding. Incredible volume. We had the follow through. We had the option flow to support the thesis. I mean, like I said, first day, boom, target one, target two, and then some. I mean, I left plenty of money on the table, but that's okay because that's for everybody else, and there's plenty of money to go around, and we can all eat. I'll never be mad about leaving a profitable trade. I don't care. If there was 10 million left down the road, it doesn't matter. There's always another trade. Sure, you might think, oh, I could have done this. Yeah, I could have retraced to zero. A lot of people don't think about that in the moment. And all that hypothetical does nothing in a real life environment with real cash because you're just guessing on a hypothetical. Oh, well, if I wouldn't have sold, it went this, I would have had that much more. You don't know that. It's only easier to say in hindsight. It's also a very damaging mindset because it can play games with your bias. You want to approach these trades with risk management, with your bias in check, your emotions in check. You want to have your trading plan established. You want to have your levels established, where you're going to cut losers quickly, where you're going to capture gains. Is it a position that you've sized into? Maybe you're wanting to scale out of the position. Have you locked your levels? Have you decided where your profit numbers are going to be as you exit out or scale out of the trade? Because the last thing you want to do is celebrate, you're on a 1 DTE to expiry, you're up 300%, you're thinking, I'm going to rally this all the way to Friday. You don't realize theta is burning. You could get IV crushed, and that same contract could be worth half the next day, even though the stock price may be trading higher. That's called implied volatility. And it can happen. Market makers and option dealers and everyone trading the stocks adjust the volatility. So it's something you want to be careful with. But what an incredible rally. Just boom, right back. And we saw these numbers before. So it wasn't out of line when we were looking at these higher targets, and it wasn't out of line for the stock. For example, July 11th, 271. A lot of people think this rally now with Tesla has got a lot of legs on it still. And you don't have to take my word. In fact, don't do that. Do your own due diligence. A lot of intelligent Wall Street people and those that cover Tesla on X, this rally may not be over yet. So we got a lot of interest, a lot of excitement, a lot of up until the election, there's going to be things with these stocks that move up and down, and they're going to be very dependent, not on the election, but interdependent and dependent. They're going to be closely correlated. So definitely things to keep in mind as the election approaches, as well as the November 15th, which would be the November monthly option expiry. So let's take a look at some of that hottest contracts Friday on Tesla. When we look at some of that premium, the 270 calls November 1st were getting targeted. 70 million both by buyers and sellers. So it looks like we got some fills down here around $483 in the morning, in the high 893. So that was a great intraday opportunity there with time still left on the contracts, because as we can see Friday, total premium 2.5 billion, net premium 67 million, with net call premium 75 million. We saw a lot of volume on the stock, which correlates to that additional buying pressure that you saw coming through the option premium. If you look at Thursday and Friday volume on Tesla, a lot of bullish investors buying commons, but also when we look at the net premiums, you can see that net call premium here on Thursday and Friday, that does aid in also the buying pressure of the stock as reflected both in the volume and the movement up in the stock. Also, there's some shorts always with Tesla, and they found out the hard way. and definitely we're buying. Shorts are always future sellers, or pardon me, future buyers. So what they once sold, they will buy at one point. And I would assume there was some short covering there very quickly because Tesla made a 21, almost 22% move. That gets pretty expensive on the short side of things and very profitable if you are on the right side of the trade. Let's see here that day. Let's pull up our total net flow then on Friday. But I want to go back to some of these calls. 265s, like I said, a lot of these on the same day expiry. The 240s, that's like a multi-leg, so we'll get to that. February 21st, 2025. Let's take a look here. What was done? 51 mil. I kind of like looking at these, so I don't pay a whole lot of attention, but I look just to see part of a multi-leg. It's just a roll, maybe. See, 240 mid. We'll have to backtrack on that one. Volume 10,052 OI. I'll check open interest tomorrow. So like I said, some of this stuff's noise. Big players, big hedges, big adjustment, market maker. Some of it excites me, some of it doesn't. I just try to sometimes look for things that were low, cheap, and a lot of people jumped into very quickly. Like we look at like volume over open interest, like the 265s. See that volume slash OI ratio, 14 to 82. So considerable amount of volume compared to the existing open interest. That's something I look for, especially, for example, those were alerted, the 265 calls Friday. 234 average fill. They did pop very quickly to 543. So if you had like flow alerts set on usual whales, you would have saw that. If you would have felt the same sentiment and executed the trade, you would have been rewarded very quickly. That was a big one. And then they dipped down again, 130, and then back up. I know we were in and out of the stock a few times last week on options. Very profitable situation. I know some people had some of their best trading days last week, and I saw a few people said they probably had the best trading day of maybe their career with Tesla last week. So I mean, it was definitely career changing, and some people, I saw some of the profit and loss, definitely some. I don't like to call like life changing because we all have our different, what in terms of money is, but there was definitely some life changing, money both negative and positive out there. Unfortunately, saw a lot of the trades gambled for short downside, which turned ugly, which is always why I say if you're doing something like that, you should be very careful about volatility, manage your risk, really preserve your capital. If you're going to take a shot at something like that, it may be safer common shares, as you don't get IV crush. You just take the hit to the commons. It's something people don't always think about. They're like, I'll buy a bunch of options. They can go to zero very quickly, but the stock sure could go to zero. But a 20% drawdown, say on your commons, is a way different scenario than 100% zero, worthless, out of the money expiry calls. Also, depending on your leverage, that's usually what it comes down to. Is your trade may not have been bad, you just might have been sized incorrectly based on size, the amount of the trade based on your total account balance. So it really kind of puts you in a bad position there, and that can happen very quickly. Which is why I always tell everyone, follow people that are smarter than you and smarter than me, because I follow everybody because I think everybody's smarter than me out here anyway. So I respect everybody in that regard. But lean on professionals. Those are licensed, those who are registered to talk about the flow, to talk about buying and selling. I mean, I can talk about ideas, I can talk about things I see because they're tangible ideas. And social media and the rules of the SEC, allow us to have communities, talk about stocks, talk about why we like them, talk about why we don't. I just try to avoid too much with the money, the buying, the selling, where we got in at, where we got out at. I just really like to stick with, maybe a gain for the week. Everyone has their own style on what they want to share freely there. But let me pull back up that net flow on Tesla because I want to, as we wrap up here, I know I took too much of your time, but I want to give you guys something extra, for those that are supporting what we're doing here and have subscribed. I think you're owed a little something extra, and I would do it anyway, but I wanted to make sure you really felt like you were getting something here, and I hope that you do, because I love this type of stuff, and I'm going to do a lot more of it. The stream on Friday was very people responded very well to that. And I used to do a lot of content creation back in the day. You'll find it if you look for it. And yeah, so it's just something I'm like, I want to blend a little bit more to X because when I put a lot of the threads together, I know they're longer. Some people read them, some people don't. Some people love that format, some people don't. Some people just have a short amount of time to want to read. So I feel like with the video, it just adds another layer where I can get more of my thoughts out there, and it may resonate with you better via video, or maybe the combination of video and the post helps a lot. But yeah, look at that premium there. Right after earnings. It's just wild because if you look at it stretched out, you're like, wow, it looks like nothing ever goes on with Tesla except for those days there. And as Tesla moved down, see we're back here in September. Tesla 260. It's just interesting, boom. And then you see that spike in premium. Let's go back to that 7 day. We'll go back to that historical there. So yeah, there Thursday, 3.8 billion total premium, 323 net premium. It was incredible. What a rally. Volatility surprisingly 55%, and then 58% on Friday, or 2.5. So you can see, I mean, like, here were some days leading up to Tesla, 400 billion, 500 billion premium. Pardon me, this is a more normal day, 1.1 billion, 1.3, 1.4. See, it varies. It's up and down. There's definitely some money in that Thursday and Friday, and we saw that reflected both in the stock and the activity, the enthusiasm, the sentiment, the gross margins. I think Wall Street was looking at 15%. They come in around 19 something on some of the metrics. So definitely a move. I know some of it was offset with tax credits, but nonetheless, they definitely made that happen. So yeah, those were some of the things we were looking at. Some of the things I wanted to talk about, give you kind of that wrap up. Take a look at what's next. We near the election. We're going to continue looking at these names. We're going to keep our eyes open on as we hear towards the election and the November 15th expiry. We're going to want to just continue to stay, in tune with the market. We're going to want to take a look at, are we continuing to make new highs? Are there any sectors that are moving? Are we looking at any rotation anywhere? We can pull up like market tide here. Are we making any, major transitions? Or is the market looking more predominantly bullish or bearish? So there are a lot of different things we're going to be looking. We're going to be watching individual names. We got some more earnings coming up, so we're going to definitely want to check on those. Let's see let's pull up earnings data here. It's nice having a platform where we can grab a lot of data all in the same space. That's why I really enjoy the product. I was a customer before I was a partner. So I was a customer back in 2021, 22, 23, and now just a partner with Unusual Whales just because I like what they do. They've always been a fan of retail traders. They continue to put out new product, continue to revamp, and they've been supportive of what I do, and I've been very supportive of them. I enjoyed Spaces calls back with them in 2021 during the pandemic when we were all trying to connect. So it was just really great. So a lot of earnings on tap here. Let's see, Monday, Tuesday, Wednesday, Thursday, Friday. I can't believe Friday is already November 1st. I know we got some Peloton Thursday, Mobileye, a lot of talk on that Thursday. Let's see here, coming up. Ford on Monday, always a dividend stock. We'll see how that responds too in regard to Tesla. Maybe grab some information there on the Ford. And McDonald's on Tuesday, JetBlue, BP, Google, PayPal, SoFi, and some big names. Chipotle, AMD, I know a lot of eyes on that. AMD on Tuesday and after hours. If you're doing any earnings trades, always use proper caution, risk management, understand what you are doing, and please just be careful. Protect your money at all costs. And there's nothing wrong with having cash. Cash is a position. Few understand that. Caterpillar, MicroStrategy, Microsoft, Meta. Yeah, big week, guys and gals. Everyone here. DoorDash, Roku. Some of these names, too, are fun to trade around earnings. Coin, Starbucks. Just be cautious. But some are very profitable. So we can talk more about these, but definitely keep any of these on your radar, on your agenda this week. These are the last, I believe, the last of our big ones that I would like to see as we gain any more direction. Let's move one more week ahead, but I'd rather save this for next week's summary around this time. So let's just not get too far ahead of ourselves. It's best to work with information, not get too much, but just enough, but just a little. Let's see, UPS. Oops, I backed up too far here, pardon me. So I know they already did UPS, I saw that. Nikola. Yep, just keep your eyes peeled. We got some information. But yeah, I hope you enjoyed the wrap up. Wanted to deliver something. Warm welcome to everyone. And then when I do say I'm humbled, I really do appreciate it. I'll be 45 next year. My son turns 24 next year. I know he started his own LLC this year. And I'm just a family driven individual. I love data. My background includes a bachelor and master's degree in computer science. And yeah, heavily driven, data driven, usually is mostly how my trading and investing style goes. But yes, I do hope you enjoyed the video. Something special for you today. Happy Sunday. Hope you enjoy the rest of your weekend. Another busy week ahead for us in the markets. Appreciate everybody is here. Again, warm welcome and thank you. And I hope you enjoyed the video and it did something for you today. Hopefully we can learn together. And if you want to do more of these, just let me know based on feedback down in the comments or replies, or DM works as well. And again, thank you and have a great day.